Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://w.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover positive news for investors from various sources, including the Fed, Halloween spending reaching $12, $2 billion, updates from the Federal Reserve and the Bank of England, Southeast Asia's digital economy growth, profit forecast from Toyota, Treasury's plans for bond sales, business news from Disney, Airbnb, Qualcomm, Apple, and Gartner, developments in the crypto market with Coinbase, Turkey's regulations and Bitcoin predictions, advice on earning higher returns on savings, and a quote from personal finance expert Peter Lynch.
Hey there, investors. I hope you're all doing well today. I've got some interesting news to share with you. So, you know how Halloween has become this massive commercial holiday, right? Well, get this. Consumers are shelling out over $12. $2 billion on Halloween now. Can you believe that? It's truly mind-blowing. But let's not forget about what went down yesterday in the finance world. It was quite a remarkable day, with positive vibes coming from all directions. In particular, the Federal Reserve had some good news up its sleeve. Now, we all know how important the Fed's actions are in shaping our economy, so any positive news from them is certainly worth celebrating. The Federal Reserve met on Wednesday and decided to keep the key federal funds rate steady for now, in a range between 25% and 5%. This decision comes after the rate has remained unchanged since July. The committee also upgraded its overall assessment of the economy, which has led to a boost in the stock market. It seems that the Fed is feeling optimistic about the economy, thanks to strong labor and GDP numbers. However, there are concerns about inflation. Core inflation, which excludes volatile food and energy prices, is currently running at an annual rate of 7%. The Fed's goal is to bring it down to 2%. Not everyone agrees with the Fed's outlook. Some experts, like Gundlach from DoubleLine, believe that interest rates will actually fall in 2024. Gundlach predicts that the economy will deteriorate next year, potentially leading to a recession. In other news, the Bank of England is expected to keep rates unchanged. Southeast Asia's digital economy is projected to reach a whopping $218 billion by 2023. Toyota has raised its annual profit forecast by 50% due to a weak currency. And the Treasury is considering increasing the size of bond sales to manage the growing debt load and higher rates. So there's a lot going on in the world of stocks, and we're here to cover it all for you. Let's dive right in. First up, Disney is making some big moves by buying back the remaining stake from Comcast and Hulu. It's quite the deal, as they expect to pay Comcast's NBC Universal a hefty $8, $61 billion by December 1st. That's a lot of money, but it looks like Disney is willing to invest in the streaming platform. Next, we have Airbnb reporting their earnings for the third quarter. They managed to beat consensus estimates on revenue, which is great news. However, they did fall short of their expected guidance for the upcoming fourth quarter. It's always a mixed bag when it comes to earnings reports. Moving along, Qualcomm also reported their fourth quarter earnings, and they did pretty well. Despite some big year-over-year declines, they managed to surpass expectations for sales and earnings. Not only that, but they also gave a strong forecast for the current quarter. Looks like Qualcomm is on the right track. Now let's talk about Apple. They're set to report their earnings today after the closing bell. The options market is showing that there's a 2% move in either direction expected. If you play your cards right, you might be able to benefit from this. Keep an eye on those numbers. Looking ahead, Gartner is expected to announce their earnings tomorrow. Honestly, we're not too high on this stock. If you happen to own it, now might be a good time to consider selling, unless you're already in a loss. Otherwise, it might be best to just hold on and see how things progress. Let's dive into the latest news in the world of digital coins. First up, Coinbase. They've just rolled out regulated crypto futures services specifically for retail traders in the US. This means that everyday folks like you and me can now access futures trading in digital currencies through Coinbase. It's a sign of the increasing legitimacy and recognition of cryptocurrencies in the financial industry. Turning our attention to Turkey, they're making moves to improve their standing with the Financial Action Task Force, FATF. They aim to shed their gray list status by introducing new crypto regulations. This shows their commitment to staying on top of the changing landscape of digital assets and ensuring they meet international standards for combating money laundering and terrorist financing. Now let's talk about some predictions. Some experts and analysts in the crypto community are speculating that Bitcoin may hit $36K by November. Of course, it's important to take these predictions with a grain of salt, as the cryptocurrency market is known for its volatility, but it's always interesting to see what the experts are saying. Lastly, BitGo, a prominent cryptocurrency custodian, has been granted a crypto custody license by BaFin, the German regulatory authority. This move strengthens BitGo's position as a trusted custodian for digital assets, providing investors with a secure storage solution for their cryptocurrencies. One mistake that many middle-income Americans make is that they are still earning less than 3% on their savings. And shockingly, about 22% of consumers don't even know how much interest they are earning on their savings. This is definitely a mistake because there are much better options available, like high-yield savings accounts. In fact, the top 1% of these accounts offer over 5% interest in the US, and if you go abroad, you can find accounts offering over 10% interest. So why aren't most middle-income Americans taking advantage of these higher interest rates? Well, there are a few reasons. First, many people simply lack information about these options. Second, some people don't have any savings to begin with. So what can you do if you find yourself in this situation? It's time to rethink how you invest or save your money. One thing you can do is put your money in a savings account that pays higher interest than the rate of inflation, which is currently at 7%. This way, you won't be losing money. It's also important to compare different savings accounts and choose one that offers the most benefits. Just be sure not to blindly go for the one with the highest interest rate, as it might have some drawbacks like high minimums or additional charges. If you're open to it, you can also consider international savings accounts. When choosing one, make sure it can be opened and managed online. You might want to go for a USD account to avoid losing value due to currency fluctuations, or choose a currency that is relatively stable. It's also crucial to pick a reliable bank and ensure that you have some kind of safety, like a guarantee. Lastly, I have a tip for you. If you're willing to lock your money away for a longer period of time, you might be able to get a higher interest rate. This is especially important considering that interest rates are expected to go down in the future. By locking in a rate now, you can secure it for a few years. However, keep in mind that there are drawbacks to this option. For instance, you might not be able to withdraw funds as needed and may have to pay penalties for early withdrawal. By being more informed about different savings options and making smarter choices, you can avoid the common mistake of earning low interest rates on your savings. Start taking steps today to improve your financial situation and secure your future. Here's your personal finance quote of the day. Investing without research is like playing poker and never looking at your cards. That's a gem from Peter Lynch, a renowned investor. You know, investing can sometimes feel like a high-stakes game, and just like in poker, you need to have some knowledge of what you're getting into. Imagine sitting at a poker table, placing bets, but never even bothering to take a peek at your cards. Sounds pretty absurd, right? The same goes for investing. Before you jump in, it's crucial to do your research. Understand the company or the asset you're investing in. Learn about its financials, performance history, and future prospects. Take a look at the broader market trends and factors that may impact your investment. Sure, there's always an element of risk involved, but knowledge is power. By doing your due diligence, you stack the odds in your favor and make more informed decisions. It's also about having a strategy and understanding your own risk tolerance. So, next time you consider investing, remember Peter Lynch's advice. Don't play the investing game blindfolded. Instead, do your homework and make well-informed choices, just like a seasoned poker player looks at their cards before making a move. Happy investing!
In today's episode, we covered the positive news for investors, including the Federal Reserve's rates hold and upgrades to the economy, Disney's purchase of the remaining Hulu stake, and Coinbase's introduction of regulated crypto futures. Plus, we discussed tips for earning higher returns on savings and the importance of informed investing. Thanks for tuning in to The Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.